Time for our ETF Spotlight. Mike Santoli with us on set, taking a look at some major tech names as Alphabet gets ready to report results after the bell today, Mike.
Yes, there are a handful of ETFs that really are concentrated in some of the FANG-type names. These earnings this week, when we have Alphabet, Facebook, Amazon, they might be make or break for the market, but for these funds, pretty close to it. If you look at the PNQI, this is the Invesco NASDAQ Internet ETF, about a $700 million fund. It is about 1/4 of this fund is in Amazon, Facebook, and Google. So obviously, pretty important in terms of what happens in these numbers. Look at the chart, though, and a lot of these charts look like this. Peaked about a month ago, also peaked in terms of relative performance at the S&P about a month ago. The question is this some kind of a rotation? Has FANG run out of some energy here to continue to drive the market? Look at the FDN, slightly larger fund. This really is pretty close to a FANG fund in the absence of a straight one. 29% of this fund, Amazon, Facebook, Google, another 5% in Netflix. Similar formation, a little bit stronger, looks a little closer to the highs, but still a similar story where you've been almost a month without a new high. Also wanted to highlight the XLC. This is that new sector spider for when the S&P changes up the sector breakdown. It's communication services. Facebook and Google, 44% of this one. So clearly,
there's no escape.
There's no escape because it was being bundled in with AT&T, Verizon, and big companies, but still not as huge as these guys.
Right. You made the point earlier this morning. Thursday is the 6-month anniversary of our January highs, and how we've sort of trudged along, but in your view, constructively?
I think the market has done just enough to preserve the uptrend, while also making sure that the skeptics have plenty to talk about and pick apart the market in terms of how the leadership is narrowed and all the rest of it. So, I still think until further notice, that's where we are. It is an unusually long period to go, though, for a correction not to have recovered to the old highs. So you can't eliminate the possibility that it was a somewhat more important peak.
And the report, things being written today about seasonality starting to fade now. That's all true.
All true. Third quarter is also the quarter when you tend to see downward revisions, when analysts basically kind of get it wrong a little more than not. And so that's why August, September tends to be kind of sloppy. So we'll see.
We'll be there, 4 p.m.
All right.
Closing bell.
I'll see you
Alphabet earnings.
Hopefully you'll be there at 3.
Exciting week. Yes.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.